Hi, everyone. This is Jason Bierk of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest, but I've been following him on Twitter for a long time. Great comments. Just started listening to his podcast. He has some great guests on there in the last month or two, including Bill Fleckenstein, Mark Cohodes, some real big-time investors and traders. Christopher Irons, the founder of Quoth the Raven Research. He has the QTR podcast, which is rapidly growing quickly. I think you have over 200,000 downloads in only a couple months. And he was the number 6 best investment blogger out of, I think, all of them on Seeking Alpha. And he's won other awards and presented at Value Investors conferences with David Einhorn and others. So, Chris, thank you for joining me today.
It is my pleasure to be here. And yet, despite all of those things, I am not retired on a beach somewhere yet, which I don't understand.
Well, I've heard, despite David Einhorn still making money, that people are withdrawing. So apparently, and this is what I've heard from people on Main Street, that you can just buy index funds and you don't need money managers anymore.
Well, I don't necessarily disagree with the fact that you don't need money managers if you get yourself a financial education, or you at least start to understand some of the bullshit that is being heaved your way 24 hours a day, 7 days a week by the entire finance industry. With that being said, I like David Einhorn a lot. I think he's an exceptionally smart investor. I think he's going to bounce back. And if I wanted to put my money somewhere passively, meaning that I wouldn't have to fuck with it, I would put it with somebody like Einhorn or somebody like Chanos, who I know not only understands equity valuation and understands value and understands bubbles, but also has a perspective on the financial system as a whole that is more towards the skeptical side. So a guy like Einhorn is a guy that I would willingly let manage my capital. And I don't say that about a lot of people because I really like to do my own business.
I hear you. And, mutual funds are going the way of the dodo bird. The ETFs are the new craze. I think fees are going to be lowered. So the old days of a lot of hedge funds charging the 20% of profits and 2% assets under management, those days are declining.
Yeah, unless you're really bringing something super special to the market, that you're probably right. Because, however, here's what's going to happen, in my opinion. If you'll excuse me, I'm just going to take a small sip of my vodka tonic that I just prepared. Okay, here's what I think is going to happen. What I think is going to happen is, I think right now, your attitude and the attitude of the financial world in general, which is that hedge fund managers are overpaid, and all you have to do is put your money into an ETF. I think that attitude lasts for only as long as this bull market lasts. So right now, the equity markets are in the midst of a Federal Reserve-fueled monetary crack binge, and they are high. They're really high right now. So I don't know if you've ever been really high, but for those of you that are listening that have been really high, you know what it feels like to be high. It feels euphoric. It feels great. And I'm not saying that like I'm smoking crack every day, but I'm just trying to make a point. The point is we feel euphoric right now. We feel like nothing can stop us. We feel like we have figured the whole thing out. Everybody, and what's really crazy, I was talking to Fleckenstein about this, is people that are just getting their exposure to the financial markets for the first time ever, people that are younger, have really no basis for comparison, because there's people that are coming up now and getting CFAs and coming out of college with finance degrees that weren't even, didn't have any involvement with finance at all when 2008 happened. And that was only 10 years ago. So, and really 2008 was the first big recession that I kind of lived through and understood as it was happening. The next one I will understand even further. The point of the matter is, look, their ETFs are ubiquitous right now, right? I just said on the last podcast that I did, I just got off the phone literally with the guy from Seeking Alpha, and I did a podcast with them. We were talking about ETFs, and I said to him, if some guy in Singapore scratches his ass, that's going to move the price of an ETF somewhere. That's how many ETFs there are. They are everywhere, and there's one for everything. You can get them on currencies. You can get them on commodities. You can get them on individual markets, individual sectors of markets. They are everywhere. And right now, ETFs seem like a very smart idea. You pay what appears to be a nominal fee. You put your money into something that, diversifies it for you. It's managed by somebody, and you kind of sit back and you kind of print money. The problem is when we hit our next recession, when we hit our next recession or we hit our next speed bump, whatever that is, whether it's systemic, whether it's not systemic, whether it's small, whether it's large, that is going to change people's outlooks on the market. And volatility changes a lot. Volatility makes people skittish. It makes people want to take their money out of products that they have it in. It scares the shit out of people that don't understand why it's happening or how to protect themselves. So if we get into a recession, or we get into a deleveraging, or we get into a debt crisis, or we get into a currency crisis, or we get into all these different, different types of semi-catastrophic or catastrophic scenarios, that's when I would want somebody like David Einhorn managing my money, because I know he's going to understand what's going on. He's going to be able to protect. Look, not beating the S&P in the midst of a bull market is, to a layperson, going to make you look like you're a manager that doesn't know what they're doing, right? And it's like Einhorn said in one of his most recent presentations, bubbles pop, at least I used to think that they did, or at least they used to. But the truth of the matter is, I believe him to be right. Bubbles do pop. It just so happens that the one that we're in the midst of building right now has gone on for a decade, and it's going to continue until at some point it doesn't. Whatever the catalyst is, I don't know what it's going to be. You don't know what it's going to be. Einhorn doesn't know what it's going to be. Fleckenstein doesn't know what it's going to be. But something will happen, and something will catalyze a recession. Something will catalyze the deleveraging, and that's when hedge funds are going to earn their money. At that point, or even at a point prior to that, where the market kind of levels out, almost like it's doing now, you're going to, it becomes like what they call a stock picker's market. That's when you want an active manager and somebody like an Einhorn or somebody like a Chanos who understands the long and the short side of things. So ETFs, mutual funds, 401ks, index funds, all the shit that Jim Cramer recommends. I want you to put your money in the SPY, at least have, I forget what he says all the time, but he says at least have a certain percentage of your capital in the SPY and just let it park there and take the dividend, take the yield. All that's good and well, and that works as long as our monetary policy as it's implemented by the central banks works, and as long as there are no visible cracks in the surface that would shake the confidence of the market or that would shake the confidence of investors. When that happens, everything changes. And you will see the next time that it does happen, a lot of people who may not have been around for 2008 will shit themselves. And a lot of people that think that investing's easy because all you do is buy and hold, or, you always just buy the dip, or, you can passively invest in the market and just kind of sit on it.
Or you buy Amazon and Facebook and get rich.
Mm-hmm. Right, exactly. Dude, you're exactly right, man. And it's just, these people don't really, I don't know. I would, like I said, at a time where volatility spikes, I would want a guy like Einhorn at the helm managing my investment, and I would pay him 2 and 20. Right now, like you're saying, it looks like hedge fund managers aren't earning their keep because a lot of them are underperforming the market. And that's because I think the market is, for the most part, rigged by the way that we are just driving the country into a massive debt position, and consumers and all types of debt is at levels that they were at prior to 2008 or above. So we're just putting it all on the credit card right now, and eventually the bill's going to come.
Exactly. And
everybody, hey, listen, man, Mike Tyson said everybody's got a plan until you get punched in the mouth.
Yep.
right? And that's how I feel about all these passive funds and, hedge fund managers underperforming and all this shit. Everybody's got a plan till you get punched in the mouth. And then we find out who's holding the pile of shit at that point. Who's holding the anyways, okay, sorry, go ahead.
And Ray Dalio wrote like in 2012 about how the economy should go through a beautiful deleveraging. I don't see any evidence whatsoever of any deleveraging in central bank balance sheets, in credit cycles.
It never happened.
Yeah.
It never happened. It never happened. It never happened. We've just been putting Band-Aids on things for the last 20 years, 30 years. And I was just talking to the last guy about this. That works until it doesn't. Quantitative easing works until it doesn't. And it's an unprecedented experiment that we're on here with our monetary policy. It's unprecedented. So, like you said, man, we never had the deleveraging from 2008, and we haven't had a real recovery.
Yes, and so you mentioned volatility, and I think that's interesting because one of the ETFs that actually almost blew up in February was the leverage volatility ETF. And there's enormous tracking error on that. The retail trader or investor should stay the hell away from those leverage ETFs, but they see the volatility in the VIX and they think that they can make a quick buck.
Well, all those leveraged ETFs, you have to deal with attrition with those, all of them. So those are day-to-day trading instruments. They're not investments. And just right up front, let me just tell you, I'm not an investment advisor. I don't hold any licenses, and I'm not trying to give any investment advice at all. Do your research elsewhere, as I say on my podcast. But having said that, any type of leveraged ETF, yeah, that one in particular, I forget what it was. It was like the UVXY or whatever. I forget what happened, but it got porked, right? It went from 90 to like 4 overnight or something.
There was a couple. I think it was the other one was the XIV maybe. There was a couple. There was 2.
Oh, that's what I'm thinking of. Yeah,
there's 2 of them. So let's talk then, Chris.
It just goes to show you, dude. It was like 2 weeks prior to that I read an article that I was passing around on Twitter that everybody else was reading about some schmuck in like Pocatello, Idaho or whatever, who was a former Target manager and made himself a millionaire by shorting volatility for the last 10 years. And, look, on one hand, you can say to yourself, congratulations, like, I'm glad you made a couple $1 million, and that's incredible. And certainly I wasn't shorting volatility for the last 10 years, so I guess you could say up front, that guy's smarter than I am in some respects. But having said that, to continue to short volatility into a 10-year bull market, I think is just picking up pennies in front of a bulldozer.
Yep.
And what we saw with that small VIX spike, because what did the VIX go to, 25, 30, I think, when that ETF collapsed? I mean, it was so small of a volatility spike that everybody's forgotten about it by now. If you try to rack your brain right now and tell me exactly what caused that and when it was, you probably can't even remember it. But at the time, it seemed like a huge deal because the VIX went to 25 or 30 where it hasn't been in 10 years or whatever. And what did we see? We saw an enormous amount of casualties just from one little blip in the radar. And that, that wasn't a systemic risk. It wasn't even close to it. It was a slight, tiny little breath of panic. It was a breeze of panic. You know what I mean? I don't even know if you would call it that. So the point is, when something big gives out, we're going to be in for an ass whooping, the likes of which we haven't seen in a long time. And a lot of people, like our friend who made himself a millionaire shorting volatility over the last 10 years, are, going to be making faces like they're passing fucking kidney stones the size of volleyballs because they're not going to have any clue that it not only what's going on, but that it was even possible. So, I like I said about this guy who shorted the volatility, it's just a matter of time. You're picking up pennies in front of a bulldozer.
And he had good timing. He made a lot of money. Congratulations. But just because he made a lot of money for a certain period of time doesn't mean that trade's going to continue to work. It's just like, the subprime mortgage broker, the people selling ninja loans, right, in Miami or California or Nevada or Arizona in 2005 and 6. Well, what happened 2 years later?
Yeah, and you know what? And to their credit, there's a bunch of guys that made millions of dollars doing that, billions of dollars, I'm sure. Look, there were people that made money in Bernard Madoff's Ponzi scheme, right? I don't know if you watch Curb Your Enthusiasm, but one of the jokes in season 8 is they do a Seinfeld reunion, and George loses all of his money with Madoff, and he asks Cheryl, who's playing his wife at the time, what happened to you? And she's like, oh, no. She's like, I got out, right before the thing collapsed. And it's true. Like, there are people that redeem their cash that were up these ridiculous amounts that got their money out in time. So, yeah, it's just a question of whether or not you make way with your profit before the whole thing goes ass up, right?
Yep. So let's transition now to some of the guests you've had on your podcast. Earlier in July on your podcast, you interviewed big-name investor Mark Cohodes. And in the past, you've also interacted with another big-name investor, David Einhorn. What have you learned, if anything, from having the chance to interview and talk to these investors that has maybe helped you improve as an investor?
That's a good question. I mean, I'm really still very much a student. Look, I consider myself a quick study, but the fact of the matter is 8 years ago, I was serving beer for a living. So I've had to learn a lot in a short amount of time, which I think I've done. Having said that, I have an immense amount still to learn. So anything that I can pick up from a guy like Mark Cohodes, or anything I can pick up from a guy like Einhorn, or anybody that's been around the markets longer than I have. I was just talking on my last podcast about how important it is just to keep an open mind and consider what everybody is saying. At some point, you have to take everything that you're given and all your input, and you have to kind of come up with analysis of your own. But anything I can pick up from these guys. I mean, from the very beginning, when I first revealed my identity as Quoth the Raven, when I was writing a lot about Herbalife, and a quote-unquote infamous Herbalife long had found out my identity and was trying to dox me on Twitter, like anybody in the world gives a shit who I am. But anyways, I had to write this little thing, my name's Chris Irons, and here's why I'm writing about Herbalife critically, and here's my story, to kind of introduce myself to, people who were ultimately anyways finding out who I was. And so I did that. And after I did that, Mark Cohodes sent me a package in the mail, with a little handwritten note. And I actually still have the note. It's upstairs in my office. Maybe I can go up and read it. I don't think he would mind. But it was really nice. It just said, it offered some words of encouragement for revealing myself. And he sent me a couple of books and a couple of CDs to check out, actually. And I really didn't know who the hell he was at the time. I mean, I was still kind of introducing myself to the whole hedge fund world. So Mark Cohodes I knew him from Twitter, I think, but I didn't really know who the hell he was. Here's the note he wrote me. He wrote, and I hope Mark doesn't, I hope he doesn't mind that I read this. So this was in April of, 2014. I really enjoyed reading your piece today. Well done for speaking out and using your own name. Enclosed, there are a few books for you to enjoy and a CD. There will be some big news coming out about this band soon. All the best, and see you along the way. And so he just sent me like a little handwritten note. I framed it. It's in my office. I just thought that was like the coolest thing ever. And then the next summer I saw him in San Francisco and, told him how appreciative I was that he took the time to write me. And we were at a gathering where there were some prominent short sellers, and he put his arm around me and pointed to the group of people, and he's like, Chris, he's like, this is the last of the resistance here. He's like, you're with the last of the resistance. And so I don't really know what I learned from that, but it felt really cool. and it felt like all of these guys. There's been a bunch of them. It's not just Einhorn and Mark, but even guys like Fleckenstein and John Nigerian, who are real people with real things to lose by going on my podcast. I have nothing to lose, right? I'm a loser, so I'm like, I got nothing at stake, and nobody knows me. So if tomorrow I fall off the end of the earth, like, it's not going to make too much of a difference to anybody. But these guys have massive net worths, and they have everything to lose. And for them to take the time to acknowledge me and speak to me and come on my podcast, I think is fantastic. I'm not a doormat. I'm not saying I'm a doormat, and that these guys
you're very humble. You're very humble. You're a good writer. You're honest and forthcoming. If you're wrong about a call, it seems you take ownership of it. There's a lot of people out there who if they make a mistake, they don't want to admit it. That's how finance works, right?
Well, how stupid is that? Like, everybody if you have an ounce of brain power in your head, you understand that nobody gets everything right, especially in the investing world, right?
And especially if you write a paid investment newsletter and you market the shit out of it. I mean, almost the track records on some of those guys, they're wrong like more than 70% of the time, and they still make a ton of money off marketing.
I have a theory that people just subscribe to those newsletters because they've got because of networking reasons, or they go way back with the guy. I mean, some of these people that write paid newsletters, I just think are just garbage, where they are, coming up with analysis that changes by the minute, by the hour, that I don't really understand it. I think that some of these people have... Yeah, I don't know. But look, I said to the guy on the last podcast I did, there's always going to be people that know more than you, and there's always going to be people that know less than you. And, I think not just in finance, but in life, the more you come to terms with that, I think obviously you'll come off like much less of a dick, but you'll probably learn a lot more too. And that's just something I just try to remember. That, and what I was talking about a couple days ago on my podcast, when I was talking about Elon Musk calling Montana Skeptics boss, I said one of the things that I learned was don't punch down. So if you're in a better spot than somebody else, don't go after them. If you have more money, if you're more powerful, if you're more famous, if don't go after somebody that's smaller than you. Punch your weight or go after somebody that's bigger than you, which is why you don't see me taking shots at nobodies that are on my Twitter that are, hounding me, or people that don't understand things that I understand. I don't try not to ridicule people for shit like that, because it just doesn't get you anywhere. And similarly, the point I was trying to make about Elon Musk is, look, man, you got 22 million Twitter followers. Okay, you're worth $20 billion. You're the CEO of 3 companies. You're basically being heralded as the next Jesus Christ, okay, by the whole world. And what are you doing? You're going after some guy who's got 5,000 Twitter followers and 5,000 people reading his articles on Seeking Alpha about Tesla, and you're going to go after this guy, and you're going to not even talk to him, not even pick up the phone and call him and go, hey, man, this is Elon Musk. I'm just wondering about some of this shit that you're writing. Do you have something against me? Not even do that. He didn't even have the balls to do that. He picked up the phone and called his boss. He called his boss like a baby, and he whined to his boss and put this guy in a position where he felt like he had to stop writing. And that's just awful.
It's a new
in
normal,
my opinion,
man. It's not just Elon Musk.
Well,
this is happening all over the place now.
In my opinion, that is, as Jim Morrow would say, in my opinion, that sucked. I just think that's absurd. I think it's ridiculous.
And I got to give you props.
I'm sure he regrets it because, go ahead.
I was going to say that I listened to that debate, and that was a fantastic discussion laying out the pros and the cons of Tesla. So you did a really good job there.
Thanks. It's nice to have a debate from 2 people that are hot to trot, both think that they're right, both are intelligent individuals, both conveyed their points well, both agreed to what I thought were very fair terms. It's cool. Look, there's been huge demand for it. It's gotten, like, I think between my podcast and the syndicated version on YouTube, it's gotten 20,000 listens or something already. And all that tells you is people are starved for actual content like that, and less, two dildos on CNBC arguing whether or not Netflix should have an 85 PE or a 95 PE.
Well said. And you mentioned earlier in the interview about people having an open mind. I think that's a rarity nowadays. It's like common sense. Common sense is no longer common. I think there's just not a lot of people. The percentage has declined of people who have an open mind anymore.
Well, I agree with that in general. So even if you just want to take that outside the world of finance, I agree with you.
Yeah, I was speaking generally, but in finance, yes, as well. So in your Mark Cohodes interview, he talked about, as a successful short seller, he was slandered, there was harassment. Have you noticed as well, since you've done shorting, that you've also been targeted and harassed as well, more than if you would have just went long a stock?
Yeah, absolutely. I mean, I'm being sued right now by a company that I was short, that I was critical of on Twitter. So that's a big yes. Companies don't come out and sue you when you're long their stock and you're trying to tell the world about how undervalued it is. But if you have an opinion that differs with the company's opinion, and they have, millions of dollars to tap and significant resources and capital, they have the option of going out and getting litigious, which is what Elon Musk threatened to do to this guy. I'm going to get my counsel and sue you. Give me a break. But yeah, I mean, look, you have to really have some constitution and some fortitude if you want to be a short seller, because it is going to make you very unpopular with a lot of people, regardless of how right you are, if you're right.
Yeah, I completely agree. And then politicians blame things on evil, greedy speculators too. So, companies, they blame things on shorts, even if operationally, like the management team really screwed up a deal, or they didn't meet, revenue guidance or earnings guidance, things like that. They, instead of taking ownership and responsibility for the mistakes, they blame the short sellers instead. That's very common now.
I think part of that comes from people not having an understanding of short selling, how it works, what its benefits are, why it's necessary, why it's an important part of a free market. People don't really understand that. And I don't think politicians and people that don't get it want free markets. I think they want a stock market that's rigged. I think they want it to keep going up. I was watching some interview with Bill O'Reilly from like 10 years ago last night, where I forget what he was talking about. I don't know. It was like one of those nights I was just going from video to video on YouTube, and I was watching all these different news commentators argue with different people. And at one point, Bill O'Reilly's talking about the stock market. I forget what interview it was, but damn, I wish I could remember off the top of my head, but I can't. But he says in the interview, he's like, I buy stocks. He's like, I expect them to be profitable. It's like he doesn't even understand what he's talking about. He just doesn't he doesn't even get it. And a lot of people don't get it. And so I think people that don't get it are just okay with buying stock and it going up. But the reality is that not all companies, even if you subscribe to the scam that I think our monetary policy is, let's just put that aside for a second. Let's just say you're balls deep Keynesian theory, and you're down. You're a shill for the Fed and a shill for the system. Even then, even in the best of environments, like right now, where the Fed is just shoving money up the ass of any company, and debt is widely available anywhere you can get it, companies are buying back their own stock. Even in this environment where anything is possible, and companies like Tesla can take on $55, $60 billion valuations, even in that environment, there's still going to be stocks that go down. There's still going to be stocks that go lower. And And if you're a short seller right now in the height of euphoria with the market at all-time highs and all these flaming bags of shit that are posting brand new 52-week highs that don't deserve it, and you come out and correctly identify a company that is committing egregious fraud, and you point out the facts, and you say, look, here's proof they're stuffing the channel. Here's proof the CEO lied. Here's proof they sold securities without registration, whatever. Even if you come out with that and the stock goes lower because of that, you're going to get shit from people because people just don't understand. They don't understand valuation. They don't understand what equity is. They don't understand what debt is. They don't understand what gives a stock its price. And it's, to some degree, you know, I was one of those people years ago. So I'm not trying to rail against these people, but I'm just trying to make a statement in general. I mean, 8 or 10 years ago, I didn't really grasp all of that. I didn't understand it the way that I do now. Just as 10 years from now, I'm probably going to get it a lot better than I get it right now. That's why, and that's part of the reason that I am doing what I'm doing with my podcast and why I'm trying to kind of get this message across that people need to educate themselves and they need to be vigilant because this is an industry that the more I learn about it, the more I keep saying to myself, if the public understood this shit, they would fucking riot. If the public understood how the system worked and the normal everyday mom and pops got it, there would be riots. Because, but again, it's an entire industry that is based on people just trying to fuck other people, and not like figuratively, probably figuratively and literally. I don't know, but but the point is, you know, everybody's trying to get one up on the next person. So everybody's trying to sell you the high commission product, the high yield ETF, the riskier investments get, the more money people tend to make. And it's human nature, dude. People just push it and push it and push it. And these are the people that manage your 401ks. These are the people that manage your, these are your local wealth. And not all these people are bad people at all, but there are people out there that are bad actors. And I know it. Hey, listen, man, I have a family member that got conned by some, RIA who inadvertently convinced them to take their money and, which was earned over the course of decades. When this person lost their significant other, they came into a little bit of money too I don't want to get too in depth into the story, but what I'll just say is the person got fucked out of some money. Luckily, they had some recourse, but that's just a microcosm of how it happens all the time, multiplied by a billion everywhere. So it's a whole industry on just people just trying to screw other people. And the more you inform yourself, the more vigilant you become, the more skeptical you become. This last podcast I did, the guy's like, well, do you consider yourself a conspiracy theorist? I'm like, not really. I consider myself fucking informed. And the more informed you get, the more frightening everything becomes. So,
and it's not a conspiracy. You're not paranoid if everyone is actually out to get you. So, I mean, in the
exactly.
Yeah, I was a stockbroker briefly during the 2008 financial crisis, and the firm I worked at, and I interviewed other firms. The first firm I worked at was trying to get me to sell like some real garbage, high commission stuff to friends and family members. Call 300 friends and family members up on the phone with the managers.
Yeah, exactly. And you know what that is? That's just a microcosm of, you remember those congressional hearings after 2008? Yeah. They were talking about the banks selling products to their high net worth individuals, and they were saying, man, that was one
to jail.
None of them. But not only that, it's not like and remember the congressman said, read from this page when he says it's one shitty deal, and you tried to sell that to a bunch of high net worth individuals. And then it got to a point where the banks were trying to sell their shit to one another. They were selling their mortgage-backed securities and these collateralized debt obligations to one another for, 60 cents on the dollar, 50 cents on the dollar, just to get them off their books. And then they were going out and buying puts on each other to hedge. So at a very grandiose level, the banks were trying to fuck each other. And at a very local level, it can kind of carry down to your financial professional trying to take advantage of individuals that don't get it. So, and then there's everything in between. And I don't want to say that there's no good people in the financial industry, because there are good people in the financial industry, but you have to be vigilant. So I don't consider that being a conspiracy theorist. I consider it being a realist.
Or conspiracy facts, excuse me. And I think, something else that you went into more in depth about this, but if I could just summarize real quickly, that fraud is pervasive. There's basically legalized accounting fraud now. You have tons of publicly traded companies now issuing financial statements that are non-GAAP. Tried explaining this to my parents. My mom didn't, she has a business degree. She didn't get an MBA or anything. This was a long time ago. I was trying to explain. She didn't know what GAAP was. She just asked my dad, did you buy the stocks and did they go up? So, I mean, I'm trying to explain that, nowadays a lot of these publicly traded companies, Chris, they can basically get away with legalized accounting fraud. There's a gray area.
Well, and it's like I said on my podcast, what is GAAP? Well, GAAP was generally accepted accounting principles. What does that mean? Well, everything's right in the fucking name, right? Generally accepted. It means that we want to try and put everybody on the same playing field when it comes to accounting. So people know when they look at a line item on a P&L, or they look at a line item on a balance sheet, that the methodology used to arrive at that figure is going to be consistent throughout the financial world, right? And what that does is it gives people a control for a basis of comparison. But like what you're saying is, when companies start to veer away and use non-GAAP numbers, and there's add backs and there's, adjustments for currency and all this other horse shit that they do, you lose that. So you lose the control, and not unlike the monetary system as a whole, the more variables you can introduce, the more you can manipulate the end product. And all that is taking a quarter where you really earned 78 cents and posting a non-GAAP number of $1.21 or whatever. All it is like you're saying, it's fraud. It's telling the investors that you made $1.21 when you made 78 cents, because you think you have some figure that is going to help, like these companies say, well, we think it'll help investors better gauge the business. Bullshit. Use the generally accepted accounting principles. They're generally accepted. It's right in the fucking name. It's not like, could you imagine if the SEC started doing this with their filings? Like, well, we require everybody to file a quarterly report, but some people can file, every 3 quarters or every 2 weeks. Well, depending on companies' performance, you would get people that want to file every 2 weeks and some people that want to file every 3 quarters. All it would do is remove the control and the playing field that kind of makes people level and kind of gives you a basis for comparison between companies. All it does is skew that so that, you can present something to investors that is a derivative of the truth or isn't really the cold, hard facts. Now, I think you're 100% right with what you just said.
So with all this new financial engineering, and by the way, they're coming up with new types of financial engineering. I'm in a LinkedIn group, and there's financial engineering conferences. It seems like I haven't gone to any, but it seems like there's a new one like every month or two now that all these CFOs at these publicly traded companies are going to learn new tricks. It seems to me, Chris, that this would be even harder every year, every couple years, with all the new financial engineering tricks, these other forms of fraud, to be a successful short seller, because all the tricks are basically bent towards figuring out new ways, whether it's with artificially cheap debt and share buybacks with debt, long term, that's making the company worse, to even if you've done great analysis, the people inside the company are figuring out ways for new ways of fraud to make the stock price higher so they can get rich quick.
Exactly. It's like the Ubiquity Network CEO said during his shareholder meeting that he panted and sweated his way through last year. All I care about is turning the levers to get the EPS numbers where I want, or he said something to that effect. Don't quote me directly, but you're 100% right. And the genesis of every fraud, the genesis of every major fraud, whether it's Theranos or whether it's Enron or whether it's WorldCom, at the heart of every fraud, there is a point at which something dovetails from what people are supposed to be doing, whether it's renaming a definition to a term in a 10Q, or it is tucking things into capital expenditures that shouldn't be capitalized, or it's, at the heart of every fraud, there's that first little kind of, peel away from the truth, peel away from exactly what you should be doing, peel away from generally accepted accounting principles. That first little bit of fuckery is what I'm trying to say. That very first little, whatever it is. Like I said, some companies like to change the definitions of words. Some companies add new line items. Some companies, come out and say non-GAAP cash flow, things like that.
You got to read the footnotes, right, on all the financials, because you got to understand all the terms changed, right?
Absolutely, dude. You're 100% right. And that's how things start. And they go and they go and they go until they can't go anymore. And as they go, the fuckery becomes more and more pervasive. It becomes more and more egregious. And the next thing you know, you're sitting on Valiant, right? Which goes from 250 to 20 in like 3 months because of the fact that it's a company that has just been built on fuckery. It's been built on, these non-GAAP acquisition accounting tricks or channel stuffing. And I still can't believe that people haven't been held accountable for that. But that is just a microcosm of how it goes in the financial world. And, in any type of boom situation like the one we're having now, I was just reading an article the other day on Zero Hedge talking about people offering insurance on cryptos now. Anytime you have a boom, there's going to be things that do well, and then there's going to be derivatives of those things that do well, and then there's going to be derivatives of derivatives and derivatives of derivatives of derivatives until every last bit is, squeezed out of the lemon or squeezed out of the orange that you can possibly get, and at which point you run out of ways to manipulate your financials, or you have to, like in the case of Enron, you have to start keeping shit off the balance sheet, or stuff gets really egregious, or one part of remember the portfolio insurance collapse, which is something I'm just still learning about, but similar type of circumstances where all of a sudden one thing goes and all of a sudden, there are no more levers left to pull. There's no more dials left to turn. There's no more definitions left to change. There's no more tricks left in the book. And then you have a major problem. And the same way that can happen to companies, same way it can happen to corporations, I think it's possible it can happen to the Federal Reserve and to central banks. And I think we're on a very similar course with our monetary policy, which, has deviated substantially from quote unquote free markets, where the central banks manipulate and set a market rate of interest instead of having a market rate of interest rather. And, they go out and buy treasuries and roll the printing press when they want. We're just doing the same thing. We're just engaging in fuckery on a grand scale that at some point we're not going to be able to do anymore, whether it's because people lose confidence in the currency or because we run into a sovereign debt crisis or because, we can't bring interest rates any lower. We're going to have that problem. I don't know when, and I don't know how it's going to happen, but we can't keep putting Band-Aids on things and not allowing markets to correct. And the truth at some point will be discovered the way it is with individual companies.
It's gone on
then we'll
a
have
lot
a problem.
longer. It's gone on a lot longer than I thought it would. But I would add one of the reasons why is the rules get changed. So the companies or the governments or the central banks can change the rules. And it's not just, you mentioned the Federal Reserve. Let's add that it's not just the Federal Reserve doing it. It's the European Central Bank. It's the Bank of Japan.
Oh, yeah,
China.
Right.
China's an enormous credit mess. China's such a mess now. I don't know if you saw this, but you have publicly, and this is rare for China because they don't do this, that you have heads of the People's Bank of China arguing directly with their Treasury Ministry in public, getting in arguments.
Yeah, I just saw that
bad.
Article a couple days ago. Yeah, you have the head of the Treasury arguing with the head of research at the central bank. I just read that the other day over monetary policy. Yep. and fiscal policy, rather.
Yeah, so things are bad because they would have handled this behind the scenes. So for them to openly do this publicly is the way they run things in China.
I'm familiar with the story you're talking about. To the best of my understanding, too, it is very unlike the Chinese government to air those types of grievances in public. And from what I understand about that situation, it was done almost exclusively in public. It was the head of research. I forget. It was either the head of research at maybe it was the head of research at the Ministry of Finance who came out and made the commentary first. But they aired their grievances in public, which I think even in the U.S. would be stunning. But I think in China that is a real faux pas. I think that those things are generally kept behind the scenes. But look, I don't
know if you saw this, Chris, but there was an even crazier interview that was done for a Chinese newspaper in English, the South China Morning Post, a couple months ago. A former PBOC official said that China's banking system has according to his research, talking to sources there, over 80% non-performing loans, and a lot of it is attached to speculative real estate. And he was issuing a warning there. So
of course. Yeah, of course. So the only question is, when does the loss of confidence overtake any central bank or central government's ability to pull levers to try to correct the problem? It's probably some years out. To be honest, I hope it doesn't happen in my lifetime, because it's going to lead to real austerity. And I'm not talking about people losing their 401ks. I'm talking about real fucking austerity. If we ever have a real confidence crisis, and it's great. You can go and you can compare the dollar to the yen or the dollar to the euro. And it's like, at the end of the day, they're both backed by nothing. So, you're comparing widgets to widgets, right? It doesn't really matter. If we have a real loss of confidence in, monetary policy globally and economic theory globally, which I think is a distinct possibility. As a matter of fact, I would almost say I believe it's inevitable at some point. When that happens, it's going to be a real problem. We're going to see some volatility. It's not even going to be volatility. It's going to be austerity. And like I said in my recent presentation, owning shares of Johnson & Johnson that you bought on a 5% correction isn't going to fucking help at that point. We're talking about brokerages going under. We're talking about banks going under. We're talking about real problems. And I know that everybody who talks about things like this is regarded as a conspiracy theorist. Anytime I tell somebody I own guns and I own gold, people just automatically assume, well, you're a conspiracy theorist, can never happen in your lifetime, whatever. Look, maybe it won't happen in my lifetime. I kind of hope that it doesn't. But I think of it as enough of a possibility to want to make sure that I'm kind of prepared to put all of your faith in the government and think that the government is going to be able to solve any problem that is handed to it, anything. To say that the government is always going to take care of us, the system is always going to take care of us. I mean, ask somebody in a third world country how the government takes care of them. It's just because we're here, we're in the United States, or you're, in the EU, or you're somewhere where you're in a first world country where the government, functions, or at least gives the appearance of functions. If you think that the government is anything other than a bunch of normal people, just like me and you you think that they're people with superpowers that have the solution to every problem, you're wrong. And I come from a household where my mother and my father both worked for the government, and they're two of the most honorable people you could ever meet. They're smart, they're hardworking, they busted their ass their whole lives to ensure that we always had everything that we needed. We're a typical middle-class family, and they both worked for the government. My dad worked for the federal government. He worked for the post office. My mother worked for the local government. She worked for our local library. With that being said, if you think the government is anything other than normal people and that they're going to be able to engineer some type of, magic solution to a big problem when we have it, if and when we have it, then you're kidding yourself. And, I feel like having a skeptical perspective and looking at things through a different lens, and this was, again, hate to repeat myself, what I was talking about on the last podcast that I was doing, where, he was talking about, where do you kind of see yourself in the realm of the financial media? I'm like, I don't. What I hope I can do is offer just a cogent enough and humble enough and honest enough perspective that gets people to think a little bit outside the box and just consider the range of possibilities and not just think that everything is always going to be fantastic and the government or the Federal Reserve or the central banks or the politicians are always going to have the answer, because it's that kind of attitude that leads you face first into an ass whooping when we have a problem, when we have a recession. And look, I'd be happy being called a conspiracy theorist for the rest of my life. If all hell doesn't break loose and it doesn't happen in my lifetime, that'd be fantastic. But you couldn't convince me that it's not going to happen at some point.
I've lived right outside of Washington, D.C. since 2000, so I know a lot of government employees. And so you said your parents are normal people. I would say a lot of them, especially around here, they're a lot less than normal. I don't want to go into too many details. People can check on my Twitter and see some of the dating profiles. It's pretty scary. And anyways, though, so you talked about the stock.
Just look at the politicians that run this country. And I'm not making any type of partisan statement here at all. I don't really want to.
Independent. I don't like either party now.
Yeah, I consider myself a libertarian, which to people that are on the far right, they think it's bullshit, and to people that are on the far left think it's bullshit. So, but if you just take a bipartisan look at some of the fucking rubes, some of the grade A morons that we have in government, I don't understand how anybody could watch some of these senators, could watch some of these Congress people, could watch some of these presidential candidates try to talk about complex issues and not have it be very clear to them that these people don't possess any type of mental superpower that somebody like you or somebody like me or somebody like anybody that we know is not capable of understanding or capable of doing. I mean, it's baffling. It really is. And there are insane people on the left, and there are insane people on the right, and there are insane people in the middle. And if you think somebody like Hillary Clinton or somebody like Bernie Sanders or somebody like Mitch McConnell or somebody like Elizabeth Warren, if you think any of those people have all the solutions to all the problems, you're crazy.
There's a lot of brainwashed people nowadays. So in wrapping up this conversation, Chris, you seem to be advocating for people not to be investing in a lot of stocks right now. You seem wary of wanting to have a lot of stock investments. You would say then that people should have cash to take advantage of opportunities in case there is a stock market crash in the near future?
Well, that's really not what I'm saying. And by the way, too, I don't want you to feel rushed because I know that I made you wait a couple of minutes. So I have time if you have other stuff. I don't want to rush you off the phone. Unless you're just tired of hearing me, in which case just tell me to shut up and I'll go away. But no, that's not what I'm advocating. What I'm advocating for, and again, I'm not an investment advisor. I don't hold any licenses. And I generally don't like to tell people what to do. As a matter of fact, I don't really like it at all. I mean, it's probably why I'm a libertarian. I like doing what I do and letting people do what they like to do. And I'm cool with it. I consider myself somebody that informs other people of how I think and how I feel and action that I take, but I don't go out and tell people, buy this, don't buy that, do this, don't do that, because it's none of my fucking business what you do with your money, and as long as you're not trying to infringe upon what I do, I don't really care what you do, to be honest with you. What I would say is personally, I think personally, if I was fully invested in stocks 10 years into this bull market, that I would personally consider, trying to allocate my capital elsewhere right now. I don't think that having some exposure to stocks is bad. And just as I was saying on my last podcast, I don't think people should be super overweight gold. I'm not like completely insane. Like, somebody wrote an article about me like, Chris Irons wants you to put 50% of your money in gold. I'm like, I never fucking said that at all. All I want is for people to have a little bit more perspective and to just, consider things twice. And that's what I try to do. I just try to consider what the best possible scenario is and what the worst possible scenario could be, and then try to, allocate my capital in between all of those different situations and circumstances. But I would never come out and tell people sell stocks. If you want to sell stocks, sell it. If you want to buy stocks, buy them. What I'll tell you is I don't think the stock market can keep going up forever the way that it's been going up. So I don't come from the Jeremy Siegel, Warren Buffett school, which is, the Dow will be at 1 million someday. It very well may be, but we may be paying for it elsewhere. Right, exactly. We may be paying for it elsewhere.
$100 for a steak, $150 for a steak or something.
Well, exactly. And you know what? People don't even understand that. They don't understand the correlation between the stock market and inflation. They don't understand, how inflation is essentially a tax on people. People don't really get that kind of stuff. So it makes it difficult sometimes to, if you wanted to be sanctimonious about it and you wanted to tell people what to do, it isn't even an easy thing to do. So my plan with my podcast, with my Twitter account, when I talk to you, I know you sent me a whole list of questions, I didn't even look at it. It has nothing to do with you. It has everything to do with the fact that I just kind of say what I would normally say if you were just going to bump into me at a bar somewhere, or we were just going to talk about this anywhere. I'm going to tell you what my beliefs are. I'm going to tell you, maybe the way that I would do things, but I'm not going to try to force anybody's hand to do anything. And the people that find that what I'm saying resonates with them, or they're interested in just listening to it because they want a little bit more perspective, whether they agree or whether they disagree, I welcome that. And I think that's cool. And hopefully it kind of helps people consider all viewpoints instead of just being, one dimensional. Here's what Janet Yellen says is the right thing, or here's what, Steve Leisman says is the right thing, or here's what Jeremy Siegel says is the right thing, and just going in those directions.
I'm also libertarian, and I think something important is that the libertarian community in Austrian School of Economics, there's kind of too much of a pro-gold bias. So you hear all these things, you learn about the Federal Reserve, you learn about the problems with fractional reserve banking and central banking, and then you say, oh my God, the system's going to collapse. I have to put, almost all my money into gold and silver. I actually know people who put literally all their money into gold and silver. I never said that. I don't think anyone's smart. We're in an environment now, Chris, where the politicians, the central bankers can basically, the bureaucrats here in DC, they can change the rules. They can devalue the currency. They can change the rules.
Oh, and they will, and they have.
Yes. So putting all your money into stocks, or going in all cash or all bonds or all real estate or all gold or all Bitcoin, very, very dangerous to put all of your money or most of your money into only one or two things.
I think, well, what I would say to that is if you made me put all of my money in one, if you told me I had to put 100% of my capital in one thing right now, I would put it in gold. I would be lying if I didn't say that putting all of your money in gold, in my opinion, is a far less riskier proposition than putting all your money in stocks. But that's just my outlook on things. I understand what you're saying, that people that, start to understand how the Fed works think the whole thing is going to implode tomorrow, which, look, I learned from my Herbalife short that confidence games can go on for a long time, right? And arguably our fiscal policy and our monetary policy, we're engaged in one of the biggest kind of confidence games that's ever existed. but I would put my money with gold's thousands of years of credibility as an economic instrument, far ahead of the 40 years of, experience that the dollar unpegged from gold has as a monetary instrument. So, I think, and I said this on the last podcast too, I think that you'd be hard pressed to find anybody that would say that in 50 years they don't think gold is going to be meaningfully higher than it is right now, as long as we continue monetary policy the way that it is. I mean, it's very simple.
Gold sat at 30 on Twitter.
Who?
The Mark Dow guy. He's saying like anyone who believes in Austrian school economics is an idiot. Anyone who buys gold is a moron. But he worked on Wall Street a long time, and he was like the assistant Treasury Secretary, I think, under the Obama administration.
Well, so what do you expect from a guy like that who's pretty much lived and breathed the Kool-Aid his whole life? And just to make a statement about that, I would never make such a blanket statement that everybody who believes in this or that is an idiot. So I think that tells you everything you need to know about him. Look, I think Keynesian theory is ridiculous and absurd, but, I'm not coming out and bashing the shit out of people that believe in it, or bashing the shit out of people that are okay with it. There's varying degrees of perspective on it. There's people that are just like everything else, very conservative about it. There's very aggressive Keynesian theorists. There's, so I think a statement like that is, it tells you everything you need to know about the guy.
Yeah, it's a good point.
I forget the point I was trying to make before that, though. I was trying to say something else. What the hell was I saying?
You were talking about gold and people that didn't like gold?
Oh, yeah. So, I mean, look, everything I need to know about gold, I know by looking at a chart of, gold's value in U.S. dollars. I mean, gold was what, $37.50 an ounce, like forever? And then all of a sudden we unpegged the dollar from gold, and it went from $37.50 to wherever it is now, $1,300 or not even $12.50 an ounce or whatever. So it's a very simple economic equation. When the purchasing power of the dollar is diminished, the cost of commodities, of which there is generally a finite supply, whether or not you're talking about gold, or you're talking about coffee beans, or you're talking about paper, or any other type of commodity, is going to move higher. And that's what we see. That's why a cup of coffee costs $7 now instead of the 15 cents that your grandparents paid for it, right?
Oh, yeah. Yeah. Most people don't even think about like how much inflation. I mean, I paid, $30 for a draft beer and some chicken wings a couple weeks ago. So and the crazy thing is, you talk to somebody on the street about that, and you just say, hey, my beer cost me $8. They're going to be like, yeah, well, the inflation, rising prices. People don't even know what it is. They just say, all right, it's just an expectation that your rent is going to go up every year. It's an expectation that the cost of things is going to go up every year. Nobody stops to say, why is that a good thing? Why is it a good thing that something is costing me more? The Keynesians would say it's a good thing. Yeah. Yeah, higher prices are good.
Well,
that's what they would say.
Of course they would. Of course they would. But I always use the example, and I think I stole it from somebody. I don't know. Probably Peter Schiff or somebody. But I always use the example of, like, consumer electronics, like your cell phones and your televisions. Like, when you don't have any interference in a market, the quality of, and you have what's close to a free market, the quality of the products gets better, the price comes down. It's a reward for capitalism, which is why you can buy an 80-inch television now for $3,000 when, 10 years ago, the same TV would have cost you $50,000. The quality of the product gets better, the price gets lower. That's the reward for capitalism, lower prices and higher quality. And people, they just don't think about applying that to the day-to-day, the things that they buy on a day-to-day basis.
I also think, Chris, that there's an anti-capitalism bias. So I've met people. Unfortunately, they're on the dating apps here in the DC metro area. So a lot of women here who say that capitalism is
You
causing all
keep
the
talking
problems.
about these dating apps. How many hours a day would you say that you spend on them?
Oh, dude, only like 20 or 30 minutes. I can't. It's. I'm only. I swear to God. I swear to God, I'm only on there for comedy purposes now, dude. I take screenshots. Take a look at my Twitter and take a look at some of the crazy screenshots on there. There's many hundreds the last 3 years.
I've seen my own crazy screenshots in my day. I'll take your word for it. Okay, sorry. What were you saying? I didn't mean to cut you off.
Oh, I was just gonna say about capitalism. You're right. In theory, it's deflationary. You get more for less. But right now we're getting less for more, and yet a lot of people, and I think they've been brainwashed this way in government schools and bad economics classes and universities and stuff, is that they hate capitalism. They're just very I ask them for a definition of what capitalism is. They can't even give you a proper definition of what it is.
And I think universities in general are doing a big disservice. I just think that universities in general, and I think the media to some degree too, and there's bad actors on the right and there's bad actors on the left, but I think in general, I think the university system is not doing its job. I don't think, or not doing its job as well as it could be in conveying the benefits of capitalism like you're talking about and informing. I just think in general, universities couch their students quite a bit. And, I'm speaking a little bit out of school here because I don't really have any firsthand examples. So you can maybe call a little bullshit if you'd like, but I don't know. From what I've seen, I think we're getting a little crazy when it comes to all of these social issues, and I'm about as liberal as you're going to get when it comes to social issues. I really don't care what people do socially in their lives, and I don't expect them to care what I do. It's a nice little balance that we should have, right? I don't care what you do with your life socially, who you want to date, who you want to marry, what you want to be called, how you want to dress. I don't give a shit about any of that. I could care less what anybody wants to do with that stuff. But I think we've gone so far, and we're starting to give people this false illusion that they should be comfortable at all times, and that the world, that the world revolves around them instead of them revolving around the world, I guess is kind of an analogy of what I'm trying to say. I think we're doing a lot more harm than good, and I think that trickles into economics. And I think when you see people like this, Ocasio-Cortez, who just won the Democratic primary in New York, who ran on this platform of things like guaranteed jobs, I can see how that would appeal to people that are, I can see how it would appeal to people in the socioeconomic spectrum of her district, because those people probably do legitimately need jobs. So I can see how that makes sense to them. And I can see how she unseated this probably, 10-term stiff in a suit. Because of course she's got this radically left platform, and she's an exceptionally good-looking woman, and I'm sure she's very charismatic, and I'm sure she delivered it real well. But I think at the heart of it, there's some real problems with that type of policy. And something like guaranteeing jobs does so much more harm than good. Nobody stops to think about how the labor market works and what makes it work and what makes people productive and what motivates people to go to work and why certain people earn, a certain wage and certain people don't. And this notion that the government is going to be able to provide everybody with a job in general is just crazy. Because what happens when we run out of things for people to do? There's that Keynesian, joke about one guy digging a ditch and the other guy filling it up, right? I mean, is that a good thing if both people have jobs? Like, no, because you're not producing anything. What we should be looking for is productivity, not just having people fucking around with something to do all day. And the reason people go to work and they are productive is because they're scared of losing their job and they want to earn money. And when you take away that fear of loss of your job, people are far less productive. And so you run into all these little problems with politics like that nobody really considers. And they can really fuck up the works. And you can look at socialist countries and figure that out because they have very high unemployment and they have very high taxes, and the countries are generally a mess. Capitalism works, man. Either you buy that or you don't, and everything kind of, I guess, stems from that, right?
And it's really easy to spend other people's money. So that's the thing about socialism. That's the Margaret Thatcher quote, right? Socialism.
Yeah, eventually you run out of other people's money.
So as long as you have a central bank willing to print the money, or taxpayers are willing to eat the losses, they can go off in these crazy socialist rants and their spending programs. But there is a limit at some point. I don't know when the limit is. You're seeing the limit now in Venezuela as things are collapsing there.
Oh, my God. Venezuela is a perfect example. And everybody says it can't happen here. It'll never happen here. Like, what happened today? The cost of a cup of coffee went from 1 million bolivars to 2 million bolivars, right? Everybody's like, oh, that could never happen in the United States. But the fact is, it can. And there's no real tangible controls that peg the dollar to much that prevent it from happening. It's unlikely. It's very unlikely that it'll happen. But, to say it's impossible, I think, is wrong. Just as to say any investment is without risk, because even the surest of investments have a modicum of risk.
So, Chris, I think you've given our listeners a lot to think about. There's some really good insights in here. I want to thank you again for your time today. We're over an hour 10, so I tried to keep it around an hour, but you provided some really interesting thoughts on there and just some really good stories about, your experience as a short seller. Honestly, things should be more like your Tesla debate, but that's just not the society we're in anymore. And, if you have a differing opinion, if you're a contrarian like you are with some of your short positions, people just, they want to attack you. It's unfortunate. It's irrational. It's emotional. And that's when you're investing or trading, that's the poker analogy on tilt, that's the exact opposite of how you should be.
I think we all stand to benefit from having a discussion about these things. And from there, allowing people to kind of make up their own minds. I think because obviously, I'm very skeptical of Tesla, but what I wanted to deliver for that debate was I wanted to deliver the best of the best from both sides. Obviously, it's enticing to people, and it's going to bring in, listeners or viewers or whatever. But on the other hand, it allows people to kind of make up their own minds. And I don't know, I think that's really important. And I think in a situation like that, it's good to kind of leave your agenda out of it. So I hope I get to do it again in the future. I just want to go back to, do we have 2 minutes? Because there was one thing I wanted to say. Okay, so when we were talking about politics, I just want to say from a very meta level about capitalism versus socialism. If you take away the nomenclature, and you take away the politics of it all, and you just kind of you strip away everything as we know it, right? And you're put here on the earth somehow, right? You either have the impression that the earth is kind of happy to have you here and that you've earned the right to kind of lay back and do nothing, or that you should give something in order to get something. And that's why capitalism makes sense to me. It makes sense to me because, first off, I would be bored, obviously, if I sat around all day, I think. But at a very, very meta level, I just think, and you can make this a philosophical argument or whatever you'd like, but receiving without giving just doesn't make sense to me. And to me, you have to give in order to receive. And when you kind of plug that into the equation of capitalism, it makes a hell of a lot more sense than socialism does to me. So maybe my support of capitalism isn't traditional. It's more on a philosophical kind of ideological level, but that's kind of how it makes sense to me.
And in nature, something that only receives and doesn't give is it's a parasite. So
exactly. So we need less ego. I think if we had less ego, we would feel like, we deserve less and we should work for more. And maybe that would help things out. But let's do this again, man. I don't want to keep your time. I really appreciate you having me on, and hope I didn't ramble on too much.
I think our listeners will enjoy your stories and your insights there. Although some of my listeners are more conservative and don't like the cussing, but tough luck.
They're gonna have to deal with it. They're just words. They're words that we invented and we assign them meaning. So they can deal with it, and if they don't like it, they don't have to tune into my podcast. I'm happy to have them listen anyways. I really appreciate you having me on, man.
Yeah, and plug last couple seconds here. Go ahead, plug your Twitter and your YouTube channel is growing quick. You have over 1,000 subscribers already. Hopefully, YouTube won't censor you. They've been in the libertarian space. They've been going after a lot of channels. I saw
that.
Yeah. Oh, you saw SVG report get.
One of the reasons I wanted to diversify myself across social media platforms, like I never had a Facebook account, but I just been plugging my Facebook on my Twitter. Because, on Twitter I have 34,000 followers. On Facebook I have 200 or whatever. I'm honestly legitimately nervous what would happen if I lost my Twitter platform or if I lost my YouTube access or whatever. But I don't want to plug myself at all, because I believe that, the way that I have come about all of my followers and all the people that subscribe to me, follow me, whatever, has been very organic. And I have never gone out and, asked people to follow me or anything like that. I've just said what I wanted to say. And to the people that it makes sense to, they wind up linking up with me one way or another. Or they shoot me an email, or, I bump into them at a bar or something. So I really, I'm not very self-promotional. People will, they'll find me if they want to find me. And if not, it's been an awesome ride. And I'm glad we had to talk here for the last hour.
Excellent. Well, we'll have you back on again in the future, and keep up the great work over there. And I look forward to seeing, some of the interesting that we live in very interesting times now with Tesla Motors and all the stuff with the central banks. It's nonstop reality television with the stock markets.
It really is, and life in general is just a very strange, crazy ride. So I look forward to what's coming down the pipe.
Please like this video. Share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetformainstreet.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.